Good evening, everyone. Welcome to today's market debrief. First, we'll be looking at is the S&P 500 index, and what we can see here over the past few days, right, that the S&P 500 index, right, have been inching up in a very small range bar, over the past three to 4 days. Okay, so overall, what I see in this, right, the past 1 week, how it inches up is that it has been, I would say, is weak, going on the upside, meaning to say a lot of investors are taking a back seat, watching this new high being made. Okay, firstly is basically they are watching it with suspicion, whether this rally can continue to go up higher. Okay, so this is I would say overall it has somehow started to turn weak already for the S&P 500 index. Okay, and on top of that, the volume for the rise has also been very small, okay, compared to its previous rise back in last year November starting. Okay, so if I draw a line here at the volume here, one straight line, you can see that for the whole rise since last year November all the way until this year March, okay, you can see that the volume has been quite on average around there, but if you see the recent rally, okay, starting from March, is that the volume has been on a downtrend. Okay, it's been getting lower and lower as S&P 500 index, right, gets higher and higher. So that doesn't really bodes well for the index, because this is clearly a very big diversion for the S&P 500 index. Okay, you can see the trading volume has been on a downtrend, while S&P 500 has been trending higher and higher. Okay, so this is a big diversion. Okay, and we have to be wary about this. Okay, and not to mention that it is also quite a euphoric move since the pandemic due to all the stimulus program. Okay, so if we look at the weekly chart of the S&P 500 index, right, this is a long-term chart since 2009. Okay, since the last financial crisis. Okay, so from the low here, right, the S&P 500 has been trending fairly well, over the past 11 to 12 years. Okay, so it's been trending and holding well this trend line, but in since the COVID time, right, after this sell down, it has been on an accelerated move, okay, on the weekly chart. All right, so this is fairly scary. Okay, so it has all the potential, right, to break this trend line and fall all the way back down to 2008. Okay, where this is the major trend line for it to move up. Okay, major trend upward trend line since 2009. Okay, so this protracted run, right, I would say is kind of overextended, on a long-term basis, over the past 1.5 years. Okay, so we probably have to be careful already. Now for the Dow Jones has started to turn down earlier, because it has not started to move higher. Let me get it then. Okay, Dow Jones Industrial Average is starting to turn down already. Okay, it's getting weak. Whereas the Nasdaq seems to be rallying. Okay, in fact, it made a so-called, it broke a new high the previous night, and then last night it started to sell back down again. Okay, so I don't know, it could be a false break or something. So it depends. And the reason for this, sorry, and if you look at our Asian market, right, the Hang Seng Index has been down for the past 2 days after the holiday on Monday, and for China, right, it has been down for 3 days. Okay, so mainly there are a lot of major news happening in the global markets. Okay, firstly, not to say that the Federal Reserve has been on the up. Sorry, their balance sheet has still been on the uptrend. Okay, making new highs. And there are also a lot of this report on China and Taiwan tension. Okay, so-called they have a lot of tension of China fighter planes going into Taiwan airspace, and all this. And China is like warning the rest of the world to stay out of their matters. Okay, so this is there's a lot of uncertainty here in the region, in the Asia market. Okay, and then in the on top of that, we also have our FOMC meeting started last night, and a lot of talks is all about this so-called tapering or scaling back of their asset purchases. And on top of that, we know that the Joe Biden spending plan has been shut down. Okay, so there's no words of it. The $2 trillion plan is going to come into effect in the near term. Okay, so meaning to say they are not going to print as much money as before. They are going to scale back on their asset purchases. All right, so plus all this culminate, or all build up into one after another bad news after another, which means that we should not be expecting further upside, in the near term, over the next 1 or 2 months or 3 months. Okay, so we should be expecting a correction coming in the next 1 or 2 weeks, or it could last to 1 month or 2 months. Okay, so that's quite about right in terms of seasonality. Okay, and as we know, most of the seasons is always the year-end rally that is really of a big move, starting from November and could last all the way until May the following year. All right, so we just have to be mindful of our position. Okay, those on long-term dividends, there's no need to worry. We just need to build up our cash, to take opportunities, when the market is down or fully corrected. Okay, so do watch out. Okay, now because of all this so-called tapering happening, right, they are trying to um, reduce the possibility of a hyperinflation happening in the US. Okay, so with that, right, a lot of the commodity market seems to take a hit. Okay, but not for crude oil. All right, so let's take a look at the crude oil prices. Oh, okay, before that, the main thing is because all the commodities are denominated in US dollar. This is a very important thing. The US dollar index has been trading sideways or kind of like forming a base, since December last year all the way until now. It's like a 6 months base formation, and it might turn trend. Okay, if they start to taper and reduce their money printing policy. All right, so if that happens and the economy seems to be sustaining, and they manage to curb the COVID crisis, okay, the whole dollar index might start to turn back up again. Okay, so we have to be mindful of this. Okay, so on the commodity space, right, I think 3 or 4 weeks over here right now. Probably the last week of May, I've mentioned about a breakout in crude oil, and it's been running for the past 3 weeks. Past few sessions I've talked about like Sinostar, PAC, Sam Marine, and some of the oil and gas, like Power Assets or Hong Kong in China. Sorry, the Sinopec and all that in China or Hong Kong market. Okay, so the crude oil, and we start to see small caps in Singapore oil industry started to move, like your Rex International, Mermaid, and all this stuff, over the past few days. Okay, so this is mainly because of this crude oil prices making new highs. All right. Now, but the thing is, the story is not that good for the other commodities. Okay, so if we look at the gold, okay, gold has been consolidating over the past 3 weeks. Okay, after a strong rally, that lasted for 2 months. Okay, in what I say is a short-term rally. Okay, trying to turn back up. Okay, so, others like your crude palm oil. Okay, there is a sharp sell-off over the past 2 weeks, and some of the like your sugar prices are all starting to consolidate back down. Your wheats futures going down. Okay, your corn futures is in a consolidation, and some of the like your copper prices, is also consolidating down. Okay, so the biggest hit will be the lumber. After making a new high here at 1,008, it has dropped like almost for 50%, to a price of 1,000. Okay, so this is one of the steepest correction, for the commodities market. Okay, so they are actually tapering, trying to curb this hyperinflation, and of course the so-called bull rally in the commodity space seems to be cut short. Okay, So this is what is happening here in the market. Okay, so as I mentioned, this crude palm oil prices, there's a sharp sell off, right? Meaning to say a lot of the Singapore palm oil related stocks has also facing some sell off. Okay, so we look at some of these stocks. This is your Wilma. Over the past 4 days, no, it's actually started to sell off before today's Singapore market drop. Okay, this is your Wilma. You have your Olam. Okay, it's already been dropping for the past 1 week. Despite I mentioned here that Olam is strong, you know, it's been rallying back up, you know. So you had rallied for 3 weeks and then now having a sharp correction. You have your Bumitama also reversing the rally, okay, coming back down, and your first resources, you know, having a 3 days drop, you know, following the palm oil futures. Okay, so this is what is happening in the commodity space and is affecting the commodity stocks. All right, so as for our Singapore market, let's look at our Singapore Straits Time Index. Okay, we had a sell-off today. STI dropping 35 points. Mainly is some of the news, you know, stating that the Singapore have to re-evaluate our so-called relaxing of rules. Okay, last week I mentioned that the COVID cases has dropped a lot, you know, and we're most likely going to reopen. Okay, but these few days there's a spike in cases, you know, so I would say they have to tarik back, you know, they have to retract their statement and maybe delay the relaxation of rules. Okay, so that caused a drop or sell off in a lot of the companies, you know, in Singapore. The Straits Times Index, right, I did a rough estimate that there's probably a chance that it might drop to a low here of about 2950 area. Okay, so if that happens, right, it's most likely going to test the 200-day moving average. Okay, and let's say hopefully it coincides with global markets, know that it could be the end of the correction or something. Okay, so let's do watch out, and take note for this. So what are the stocks that we should be looking out, or what I've mentioned last week? Some of the notable ones, Sinostar, I've mentioned about this stock for 2 weeks already. Okay, I started talking about this stock over here beginning of June. Okay, and in the past 2 weeks has had a major rally from like here 37 cents all the way to 48 cents, so it's up 10 cents. Okay, before this pullback happening. Okay, so it's most likely going to take a break. Okay, and if all turns well and oil prices still continue to move higher, it might carry on its rally. Okay, as I mentioned, it's more driven by this earnings that happen. Okay, and we are most probably expecting a higher earning in the next uh, quarter. Okay, coming in 1 or 2 months time. Okay, this is sets I mentioned here last week. Okay, and it started to rally up. Okay, and now it has a 4 days pullback. Okay, so you might want to watch this. Okay, so if Singapore is able to keep cases continuously down, no, it's like now like 20 cases, no, we can go down to 15, 10. Okay, this might start to move off because there's expectation they are going to relax rules, and then more planes are going to come in, more planes going to fly out. Okay, so SATS is going to that's the expectation for SATS, because they are the one that's serving the airline industries or food catering. Okay, and I prefer this compared to SIA. You know, SIA is basically just burning cash. This is Mapletree Logistic. Okay, I'll talk about this, and then it had a nice rally yesterday, but it gave up all the gains today after the so-called our Minister Lawrence Wong's comment, you know, about retracting back their reopening phase. STI had dropped 35 points. A lot of it is due to the big cap stocks. Okay, so you have your Singtel, you know, after it's tried to rebound, it basically gave up all the gains and then sell down to its low again. Okay, its previous low 231. We have our banks, OCBC Bank here having a sell-off, okay, with increased volume. So most likely we should be expecting further selling on the downside. Okay, so to me, I'm looking at it dropping below $11.50, before I look to buy back those shares that I sold here at about 12.20 area, sorry, around here. Okay, 12.20, 12.30, 12.50, that I help some of you guys sell. If it drops back down, we should be like so-called buying back them at this price. If it shows that the economy is recovering, we can buy back around in the $11 area. Okay. DBS is still sideways, but there's also a further selling happening. Okay, so basically a lot of traders that bought yesterday are also selling today. All right, so most likely there will be further selling to push prices down further lower. Okay, probable stocks that still seem strong. Okay, as we know, Hong Kong has been reporting like 0 cases for a few days, or very low number of cases, over the past 1 week. Okay, so stocks that are exposed in the Hong Kong area, okay, seems to be strong. Okay, this is Mapletree NAC. Doesn't seem to have suffered any sell down. We will probably be looking like the Hong Kong shopping and all this to be reopening, their economy to reopen. Okay, so this is Link REIT is already started on an uptrend. Okay, Fortune REIT is the strongest one. Has been started on an uptrend since I've last talked about Fortune REIT here at the 750 area. I'm talking about possible breakout on Fortune REIT. So it has already moved off more than like $1. Okay, it's like up 15%. Okay, so that's all I have for today. I mean, a lot of the small cap stocks, the oil stocks rallied. The past few days is mainly due to the crude oil futures, making new highs, but it's already starting to pull back down. So it might start to some of these oil related stocks might start to turn down. Okay, so there is some selling happening. Okay, or rest. Okay, but nonetheless, it might continue to rally up again. There are a lot of signs that the whole, especially the US market, might turn down. So if that happens, right, I mean, based on a lot of this news that is happening, major news, your Federal Reserve, Joe Biden plan shut down, China Taiwan issue, tapering of the so-called asset buyback. Okay, so all this so-called free money, right, the US government is like trying to take back. Okay, so as we know, as they taper, most likely the stock market will also come down or correct itself to so-called price in this tapering. All right, so we do not know for sure until tonight's FOMC meeting concludes, and then they give a conclusive answer on what are their plans, for the next few months. I do not have much to talk about because most of the stocks are on a downtrend. You can probably look for some stocks to short or all that. But ultimately, is more on a ranging market. But it's a big range market. So giving your stocks to trade on a short-term period is a folly. Most likely you know to stop out very easily also. So good thing to do is to stay on the sideline, accumulate cash, save up your money, and wait for the right opportunities to buy in. Okay, so I mean, what are the right opportunities? Basically, like last year, COVID is really a good opportunity. I've talked about a lot of stocks that we can buy on a long-term basis. OCBC is like one of the stocks that I talk about repeatedly. On a $8 area, we basically just accumulate stocks, just buy. Sometimes you like see some losses, you see not going anywhere, but thereafter it just rallied, or 40% upwards, in a few months. Okay, so nobody can foresee that. Okay, so we just need to be sure that, hey, this is a value stock, is trading below book asset value, and it's still earning, it's still making money, it's still growing. Okay, so it's sooner or later before it will start to rise up, and we just need to sit on it. So some of the stocks I've mentioned, I've talked in detail, why they are good, why they are why this one we should look at. This is like Union Gas. Okay, so I've talked about this stock. I remember it's somewhere in the 20 over cents area, 30 cents area, somewhere here. Okay, so I've talked about this. It has broken up, and then it consolidates sideways for a period of time. Okay, so I've talked about this Union Gas stock, and if you have held this stock all the way till now, is up like what, 30 cents. Now it's like 100 plus percent, 150%. Okay, so that's one. And then I also remember, you can go and check back some of those old videos, like taxing packaging. I've mentioned that we are in a lockdown period. A lot of China, they need a lot of packaging materials, cardboard boxes and all this, and taxing is, like, I would say, well positioned, and the price is right. After a long protracted down, the price is right, and you're still making money. Okay, so if you have bought at 40 over cents, now it's like 80 over cents, you have like double your investments. Okay, so sometimes such sitting and waiting, having a good company, might turn out very well. Okay, so there are stocks I've missed, your iFast or Medtech and all this. There are stocks that I missed, but I mean, if we just get a few stocks and we bank on that, we can really make some good money over the long term, and we trade less. Okay, so I hope this helped, and further down the road, I hope I can find more of such stocks, to recommend to you guys. Okay, so that's all I have for today. See you guys next week.